Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, April the 13th, a little after 4 p.m. Eastern Time. Like always, let's get right into it and right through the disclaimer. This webinar is for educational purposes only. I'm not a licensed representative giving any kind of trading advice whatsoever. These webinars are designed to educate you and help you in decision-making processes. Okay. What did the market end up with today? I got a really new script for you guys if you're interested. It pulled back today, and VIX pulled up. I was talking to one of our members on Friday, and he listens to Shadow Trader. I do too as well, but not all the time. I don't have time. And they were also anticipating a little spike in volatility. And that's not uncommon. That's not uncommon, especially if you have a run-up like what we did. Let's go to the macro picture right away. Once again, for those people that are new, the left screen is the Dow, middle screen is the S&P, and the right screen is the NASDAQ. I happened to put on Carter's linear regression on the S&P just to see what direction it was going. And it seems to be trending down with lower highs. What I was trying to say in regards to the market pulling back a little bit, if you look at the ebb and flow and breathing of a market when it's trending, now granted it's been kind of volatile over the last 3 weeks. Hopefully we're going to get into kind of a trending period. Typical trending is it's going to go up 2-3 days, or I should say 3-4 days, and then pull back. And then run up 2-3 days and then pull back. And very, very common. You can see that in the Dow. You can see that distinctly in the S&P. 1, 2, 3, pull back. And of course the NASDAQ is no different. They're all pretty much the same. Everything is still bullish though in regards to the direction of the market on all three indices. The two moving averages, which are very good, the 49 EMA over the 89 EMA, it's all positive. The whole moving average is up. The trending price oscillator is just crossing the zero on the S&P, and the Dow, it's already pulled up pretty strong in the NASDAQ. So everything right now is moving upwards in a good direction. Top linear regression is way up here on the Dow at 18,423. And if we put on some quick Fibonacci's to see where we're at, you can see that we finally crossed that 23% after, and we're moving back up to, I should have actually done it the other way. It probably would have made more sense when I do that. So we're up to the 78% retracement from the low, and really there's nothing stopping us as far as resistance goes, other than perhaps this last high up here of running up to the 18,288 last high and going through that. The same I can do with the S&P. You'll see the exact same pattern. Once again, we've gone through that. Let me get rid of these so it becomes a little bit more clear. We kind of bounced off the bottom of linear regression. 49 is above the 89. We have a MOBO breakout, and everything is heading up, and there's no resistance between the 78.6 and the 100%. And lastly, we can do the exact same thing here with the NASDAQ. And it is not going to take much to get past that 5042 and then keep on going. You can see the top of linear regression, 5121 on the NASDAQ, 2138 on the S&P, and 18,423 on the Dow. So everything's still as rosy as far as the technical side goes. And to confirm all that, I'd like to just quickly also, since this is A lot of people use Best Choice. I use it quite heavily, finding stocks, trading. Let's confirm all of this. Well, let me just say this without going into too much detail. Any list that I have run in the last 2 weeks, majority of the longs start in the middle of April and go into the beginning of May. Pretty much any. I recently ran a list. Well, let's look at short term real quick just to make sure we all know what's coming up. There's a lot of stuff coming out from the government this week, folks, so please be aware. PPI is coming out, retail sales tomorrow morning, industrial production on Wednesday, jobless claims and sentiment and consumer price index, all of these. We got a lot of info coming out of the government. When you look at that stuff, just be aware if you're entering or exiting, that these things could create an interim move in the market. I ran the weekly cycles, all the weeklies from TOS. I loaded them in and ran them, and these are all the ones that showed up. And if you look at the longs, they all start middle of the month and pretty much go to the end of the month or beginning of May. Whereas majority of and again, that VIX, that's one of the ones that I love to trade. That's a 6 out of 6 to go down. That's one of the ones I listed today in regards to the ETFs, buying the May 20s. And it actually would have been a great day to do that, folks. I haven't jumped on them, and you could have got a really cheap price. Why? The market's going down, which means the VIX is going up. And when I looked at this yesterday, it was 36 cents, the VXX May 20s. Phew, 24 cents now. But look at that, folks. If I highlight that, you're going to see that's where the majority of open interest is of any other strike price. And that is also almost, it was yesterday, the most volume. Today, a lot of people jumped on one closer to the money because why? The VIX went up 53 cents to back up to this level of 22.66. So bottom line, this is a good time to be looking at, and you may want to go a little bit closer to the money. The math that I did using this percentage of 8.45 was based on 53 cents lower. So, you could go a little bit closer to the money and adjust your strike level. But these are the targets. Best choice is $19.96. IV, subtraction of the implied volatility, is a target of $19.13, and 1 month standard deviation is all the way down to 18.77. Now, all of these numbers would be a little bit higher because the VIX went up, but it's a really nice looking trade. So once again, the point I'm making about the market looking decent and really nothing stopping it from moving upwards is confirmed with any list that you run that shows from a seasonal historical perspective, most of the trades start in the middle of April and run into the beginning of May. Well, I was listening to CNBC and Fast Money and some of these people and reading some articles on Seeking Alpha, and majority of people think that everybody's worried about corporate earnings. This is earnings season started. Alcoa kind of led the party last week. Oh, did everybody get my email on Friday in regards to the most volatile stocks? Yes, no? Yes? Okay, good. All right. What I did in your guys' behalf is I took that and I entered each one of them into Best Choice, and I ran it through the Did you hear that ding, by the way, from TOS that just happened? I'm just wondering if it's only me, or did you guys hear that as well? Did you hear a big ding? You know how TOS does a ding when one of your alerts comes up? You did? No? Okay. All right. Sorry about that. I ran this, and then I created a list out of this. And I will tell you, folks, wow. all sorts of stuff. Now, I literally had to input probably close to about 9 of the stocks in this list because they were not even in the database. So there's not a lot of history behind it. But what is interesting, and I'm going to leave this up to you guys, okay? I did a lot of the heavy work for you, creating the list, running it through, finding the window of opportunity, putting the percentage potential move. But with all of that, I created a list that I think is pretty doggone interesting. And that is this. This is a continuation of earnings. All of these stocks are on the most volatile stock movements of any stock, number one. Number two, they're all best choice 100% winners historically with a minimum of a 10% average move. And lastly, they're all at least 11% or greater move on earnings day. So I gave you the actual, all the earnings dates, the actual day move, historically they do on average, the best choice move. I think it's going to be up to you guys to pick these things. What strategy strike, expiration month, what you're going to pay, and so forth. Because some of these I wouldn't even touch with a 10-foot pole. Like this one, BCOV. Anybody ever heard of BCOV? Raise your hand. I don't see anybody raising their hand. One of the reasons is because look at this. There's no action, folks. There's no volume. There's no open interest. There's nothing going on. Okay? That's in May. April, you know, there's some stuff in, just not enough, folks. When you see this kind of spread difference between at the money and one strike out, market makers are going to manipulate it, number one. Number two, look at the price of the stock. It's under 20 bucks. I'm not going to touch it. But on the other hand, one like Yelp, I read a whole article on it on Seeking Alpha. Very strong company. Very strong. Yelp and Groupon, two attractive strategics. Read this article. Just go to Seeking Alpha, type in Yelp, and read this article. It compares Yelp with this company out of China called Dianping and Meituan, which are valuated at a $4.5 billion company. I guess this is Xiaomi, which raised, I guess, $850 million. Or this company, Diamond, raised $850 from this company. So read it. Evidently, they're saying, hey, Yelp is positioned just like this. You know, Tencent and Bob are keeping are keen on group buy and use reviews to enhance their ecosystem. So a lot of positive stuff about this company. So you say, all right, well, okay, so earnings are coming out with them as well. Not until the end of the month. So, you know, you got plenty of time with a lot of this stuff to analyze it, evaluate it, and look at what strategy you want to do. But this is what I like to see. That's what I like to see. Lots of excitement, lots of open interest, and it's in my price range for $47 stock. I like that. So I just wanted to show you there's a list for you guys to have fun with. Be careful because these are extremely explosive stocks, and make sure you've got the volume for liquidity. And, you know, on some of these you may want to just, you know, there's an old saying, when volatility is low, you want to buy options. When volatility is high, you want to sell options. So you want to collect premium because that volatility will get sucked out once an event happens, specifically an earning event. So if you folks don't have that this particular tool, or I should say script, I'll be more than glad to email it to you. Just email me after the meeting, and I'll show you. I'll email it back to you. Or if you don't have that, folks, on any one of these stocks, you simply can go to the bot. If you use, of course, Thinkorswim, you can go to the today's option statistics at the bottom of any option chain, and it will tell you where the current IV percentile is. And that's a really nifty tool to know, is this stock fairly priced in relationship to its historical last 252 days? Where's it sitting at? between a scale of 0 and 100. You know, if it's sitting at 80%, you know what? Maybe I should sell because that's a lot of high IV. So Yelp isn't that bad, folks. I mean, it's when this is in yellow, it means it's very low. I mean, the IV rank is 28 here. On the other hand, you could take maybe a look at Pandora. I wouldn't touch with a 10-foot pole, but that's just me. They're at 50%. It's green, which means it's getting up there, you know, in its percentage implied volatility. So take a look at those. I don't want to belabor those or spend too much time, but I think it's interesting. I think you guys could have some fun with that. Okay. Schlumberger I didn't look at, or GS I didn't. So why don't we analyze those right now together? Because they're coming out with earnings this week. This is Goldman Sachs. April to May. Hit my puzzle piece to make sure that I've got accurate data. I see the green dots earnings. It defaultly is set to best rating of whole zone on tab 3, minimum days of 14. I'll highlight this area to see if I can get any statistics. 60% from the end of March to the middle of April. What about this area right here? I can't seem to get it with best rating of whole zone, so I'll change it to best rating of coordinates. And I get a 70% short. So then I'm going to say, all right, this is at a scale from the lowest the stock has ever been to the highest the stock has ever been, and all 10 years worth of history overlaid on one chart. Well, where is it sitting at right now in that comparison? I'll go to tab 1, click on 2015, and it's sitting way up here, close to 100% of its historical price movement, which then I'll go to the candlesticks, and it verifies this. But I got a lot of positive momentum based on this chart. You know, the price is above the 200. The 50 just crossed the 200. I got a gator mouth. I call it a gator mouth. Earl and I like to call that like an alligator, like an alligator's mouth opening up, pointing upwards on just a regular MACD, just using these tools alone. So this is all actually pretty positive. These are the last highs. You can see there was a double top here, and then, of course, it collapsed. That's, of course, a bearish engulfing candle right there. We know that. Should say that. It's not pulling it up. Anyways, seasonally and historically, 60% probability to go down. It's based on best rating of coordinates, best profit per trade. I take it all the way there. I still got that 60%. Yes, I will. I will, Richard. I will check it. Yeah. This, I'm going to talk about that, Richard. I'm going to talk about that big time, real big time. He's talking about Netflix, and I've done a lot of research, and I've got some really good ideas about what to do with that thing right now. But I want to analyze GS because I didn't, and I want to see if it is a potential trade for us or not. Anybody else know anything about GS they want to contribute? Seasonally, it doesn't look very good. Put candidate, yeah, that's what I'm thinking too. Let's go to linear regression lines, go to a little bit further. See, it's sitting close to the top, 83.9% of its extreme movement in 6 months. What's that look sitting like in a year? Let's get rid of this. Well, in a year, it's really only at the 39. And it's a strong company, Goldman Sachs. Come on, folks. What's it look like on a shorter term? Shorter term, it's also up in the middle of linear regression. But from a seasonal historical spot, 70% probability to short. And their earnings are coming out this Thursday before market. Let's see where the action is. There's quite a bit of bullish interest versus bearish. What's it look like from a charting perspective? I mean, my charting perspective, my charts. These must be some old. Well, from a technical perspective, this chart, everything is very strong upwards. I don't have confirmation seasonally. I didn't put it on there. Okay, wait, some other people are, I need to open this up a little bit so I can see this. Rich says push comment. Yeah, another person says overbought. Yeah, I see that same thing, at least with best choice with this deviation they have on linear regression. And I just don't have any confirmation seasonally. 60%, 70% probability. You know, and if I look at history of 2014, it popped a little bit, went down, popped up towards the end of the month. 2012 tanked hard. 2011 and went down. You know, again, best choice isn't going to be the definitive end-all be-all when it comes to determining, except if it's just a screaming example like Netflix or Priceline or any of these others that, you know, it just screams upwards every single year that's earnings related. This is an obviously earnings related trade that it says historically 60 or 70% it goes down. But probably the best way, folks, is just go to a chart. This doesn't take long. Go to 5 years in a day. Okay? It has all the earnings on the bottom. So all you have to do is highlight and say, well, what did it do last year? Right here. This was last year's. Well, last year's, it closed. You can see the close up at the top left, 157.44. Well, the next day, it closed at 157.80. If you would have played one strike out of the money, you would have lost money because volatility would have probably sucked up any profit yet. So last year it wasn't very good. Going to the year before, 2013, went down. Year before, went down. Year before, went down. So I think, Richard, you're right. Put candidate. So if anything, if you folks want to, it's not real strong in my opinion from historical 2.51% based on a stock that's at 195. You know, the 190s maybe for 250. That's, I don't know. I'm not going to bother with it. Schlumberger, SLB, what do they do? Okay. Can already visually see that this may be a pop, but I also see that they're sitting up here right now too. But that's not uncommon to almost every company. Well, there you go, folks. 90% probability long. That's based on best profit per trade. Let's just do the default best rating of whole zone. And I also have a 90%. And Schlumberger is coming out when? 16th also. Aftermarket. Okay. So we have a historical 6.25%. Not a great rating. It's because it's a 15-day trade and only a 6.5%, 6.25% return on your money during that time frame. So the days are dragging down this rating a little bit, but I see pretty good consistency in percentage movement over the last 5 years. That's important to me when I look at that. Yeah, it's sitting up here. You know, and usually, Ira, this is for you or for anybody else who's not familiar with looking at this and been playing with this. Whenever you look at this 90% on the seasonal chart and you look at all of these spikes up above, it usually does not take long for it to tank afterwards. It means it's overbought from its historical standpoint. Okay? Doesn't mean that it still can't pull up a little bit. I mean, it's happened. Last year it went up, but of course it was only around here in the 40-some percentile. Year before that, went down, went up. So what does Schlumberger's action look like? Well, looky there. A lot of people loading up in the 85s on the put side. A lot of people are loading up on the 90s from the call side. So one of the things you want to do is say, is somebody playing, are they playing a strangle on that? So change your spread to a strangle and take a look and see if that's where people are loading up. You could see there's 7,606 at the 87.85s and 7,806 on the flip side. So bottom line, there's 7,806 people that are doing a strangle, buying the 87.5 calls and buying the 85 puts for May. Since this is this week, let's take a look at April. Let's take a look at what the IV is. Well, IV is really pretty low compared to, let's shorten up these strikes so you can see it. Well, it's 30 some odd percent, 38%, 39% compared to 24. What's the analysts have to say about it? Yeah, you got 19 say buy out of a total 27 that follow. And they're saying a target of about 98. Based on a 6.25% move, 88.02. Gives me a 93 target from best choice, which the 92.5 for 89 cents is about a 1% premium because the mark on that's probably 85, 84. You still have a delta over 20. You're not spending as much. IV plus over here on the right is $5.50. Well, $5.50 plus there puts me way beyond 92. Puts me at 93 and change. And $6.72, 1 month standard deviation. $6 plus 88 puts you easily at 94. So let's analyze this. Let's say that we bought the 92s. We're expecting a 6.25% pop, not 10%. So let's bring this down to 6%, which would put you at a target of 93.30. Let's change the date from May 5th to when is earnings coming out? The 16th. So let's just say after that, after market, it pops up on the 17th. Well, you spend 89 cents, so that's $89 per contract. Your potential profit is 187. That's a pretty doggone good return, folks. That's over 100% return. So if that was something to be traded, that would be the opportune strike price based on risk reward and the potential move. I mean, I could see if it moved up a little bit more, which the IV plus as well as the standard deviation all puts it at $93, $94 easy. So that would move this up, let's say to 7%. There's 94, so now you're at 239, which that's real easy math, folks. 239 divided by 89 is 268% return. So that's a pretty good return, risk reward. So should I put down SLB? I think I'm going to put down SLB on the sheet. SLB. And was a call, that was May, and that was the 92.5. Sorry, I'm adding this as we're speaking, so I won't forget. And that was a 90% probability, and then I'll put in that. Okay, All right, so those are the two that I didn't analyze. Now let's go over the ones I did. Since this is Earnings Central. Three stocks that Goldman Sachs is expected to have unusually big moves. One is JPM, the other is 3M, and the other is Intel. JPM I already looked at, and based on Bottarelli's intuitive knowledge and looking at seasonally what JPM does, we weren't being very froggy. Well, see, when I do that seasonally, it almost always changes my mind. It's an 85% probability to go long. Problem is with JPM is what, folks? And do you think this is built in? Let me ask you. Do you think all of JPM's lawsuits and everything else that's happening with them is already built into the market? Or is JPM before or after market? Does anybody remember? Okay. Thanks, Robert. Going back to SLB, I think you were talking about, the 90. If you did a vertical on this instead, just a bull call vertical, buy the 90, sell the 92.5s, it's 81 cents. And that reward is still over 100%. That's 94.08 based on a 7% move. 6% move, you basically made 100% on your money, less commission. So that's another way, of course, you risk less because you're also selling the 92.5 in case the trade goes against you. Even though if it goes against you hard, you're going to lose your money because this is a bullish move. But it's a way to mitigate the cost. But one of the things, Robert, verticals for me, I like to play on my prime 11s. Like ISRIG or Netflix or Priceline or CMG or Google. Why? It allows me to enter close to the money for cheap. Allows me to get in there for cheap. Like I just did a bull call on Priceline, and it was $4.25. And what is the Priceline stock? 1,000 and change, almost 1,200 plus. So generally, I will just do a directional if the price of the spread is about the same cost as a directional. I'll get more bang for my buck on a directional than I will on a spread. Oh, JPM is tomorrow morning. Okay, so let's forget about it. How about Intel? Sitting way up here again. Almost all stocks are, though, folks. Well, strong short historically, but you know what? Let's hit the puzzle piece, get rid of some of the extra years because this is showing 14 years. Let's just show 10. Intel was necessarily the same company 10 years ago, 14 years ago. 70% long there. Difficult time of the year to really find great ratings, historical moves. I got an 80% long actually from about the 12th today to the end of the month. 80% probability long. That's best done using best rating of coordinates. I mean, I could try best profit, but you know what? It's probably going to show me about the same. Now it showed me a 2-day move. It was long. Now it's taken from the beginning of the month to the beginning of May. So best one that I can find is this best rating of coordinates. Well, there's 60% long, but that's towards the end of the month. So I'm trying to squeeze in this part that's, there it is, 2.74%. Based on everything that I looked at and I researched, Intel is a very strong company. If you look at what the analysts say, what? Because I put INTL. Wake up, Gary. 16 strong buy. So majority of them on the 13th, Canaccord, Genuity said 38. Members target is 40. Analyst target for their EPS is 40 cents. I thought it was to be a bullish trade. That's what I listed it as. I specifically like the incredible amount of open interest. And now that I look at today's volume, that's the strike. I picked the 33s because it was up 20 cents. And I'd probably still stick to the guns of, you know what? No, I'd probably go once closer to the money. Because Intel, if you look at it from a historical charting standpoint, this is not a big move. Even seasonally, folks. I mean, how much are we expecting? 2.74? That's not a big move. $1.03, 4 cents, $1.48, $1.10. So when you don't expect a big move, you're going to either do at the money, even one strike in the money. I generally wouldn't do that because you're not going to get the ROI that you want because you're paying more premium. This was last year. Estimate was 0.369. They came in at 3.8, and they closed at what? 26.77, and the next day the high was 27.24. So you would have had to been at the money. And you got to buy some time so it doesn't suck out the volatility out of being overpaying for a spot month. If you're going to do spot month, and you could go way out here and sell this 34, which I guess a lot of people did. They're going to collect that 9 cents because it's not going up to 34. Either that or you see a lot of people down here. You see this 29.28. They're selling and getting a credit. $0.03. It's not a lot. But if you think about it, that's a $2 spread. You only need to have a $200 margin requirement on a $2 spread. And what is 3%? $30 of 200. 15%? Is that about right? 15% between now and the end of the week on your money? Where are you going to go get that legally? So that would be another option to do. I don't want to get into selling strangles, which is another technique you can do, but that becomes a little bit more complicated. And I want to kind of keep the old KISS principle with these webinars. So I'd still do the 44s because if you take 2.64, which is what you expect, 31.73 times 1.0265, I think is what it was. Well, it only puts me at 32, so guess what? I'd have to change that to a 32. And you're going to pay a little bit more, 0.81. Remember, when you get the spreadsheet, folks, those numbers again, once again to remind you, is all based on closing prices based on Friday's close. So things change. Do the math accordingly to get your right target prices. All right, 3M, MMM I looked at. And I don't know why I didn't list it for some reason. When are they coming out? Sometimes I overlook things because I'm looking at so many things. Okay, they're coming out the 23rd. And that would be before market. What do the analysts say about MMM? Anybody else have any scoop about MMM they want to share? Looks like it's pretty froggy. Well, maybe that's why I didn't list it. It's a mixed bag. 6, you got more people holding than you do to saying strong buy. So from an analyst standpoint, there's really a divergence mixed. But from a seasonal historical standpoint, it's an 85, 12 out of. But let's get to the 10 years and not do 14. Still 90%. 3.95. This would not sway me then. I put more stock in seasonality than I necessarily do from an analyst standpoint. They don't have this tool. They answer to a different authority than I do. So 3.95, let's see if there's any where the interest is here. Well, you got some bearish interest. You definitely have. Wow, look at that over here. Jeez, oh Pete's. That's interesting. Why are they going so far out? Well, they're collecting money, I guess, but this isn't a lot to collect, for crying out loud. It's 1 cent. Of course, if you buy, 1,000 contracts, which the market maker would be obligated to buy back or give you that money and then eat it. So, still, it's only $1,000 though. It's not a lot of money. What's spot month look like? Well, spot month, yeah, you still got a lot of negative interest here. Of course, this could be a $5 spread, 150, 145. You see that's where the open interest is. Collecting 2-cent credit. If they're thinking bullish. Probably the same thing here, except it's a tighter spread, 155, 150s. Collecting 4 cents. What is the IV on this? Well, it's low. Expecting a $9 standard deviation move though. IV for May is $8. Best choice 3.95. 165.84 times 1.0395. 172. So 170s. I don't like that though. And that's you couldn't do that. You wouldn't do the 170s. Even one strikeout at the 167, I wouldn't do. The only thing I would contemplate doing is the 165s. And that's close to 1% premium on a $165 stock because I got a 60 delta there. If I was to be bullish on a spot month, because my IV is actually very, very low, 14% compared to May's, which is actually 19% versus the 167s or 165s is 16%, and this is 19, so you got lower IV here. So this is not necessarily overpriced is what I'm saying. So if you were to be bullish on this based on a seasonal 3.95% move, you'd want to go pretty much at the money. I mean, I can go through the analysis. Folks, you need to really learn to do this. It's very simple. You click the analysis tab, go to add simulated trade, type in your symbol, pick your, what was I looking at just now? MMM. Oh, I was looking at spot month, that's why. So type in the symbol, go to your expiration month. We're using 165s, buy it. You'll see it appear here. Then these slices automatically pop up, 10% up or 10% down. You can adjust that to whatever you want. They're saying $2.82. So that puts you at what, about $68, $69 thereabouts, right? The 1 week standard deviation, you wouldn't use 1 month, is $4, and you could look at 1 day even. It's really, if you're coming in the day before earnings, that's what you would want to look at is, hey, this is the potential up or down move in 1 day. You can also do that on the trade tab if the MMM appears up here, but it doesn't, which there's a symbol here that you could see. It's like 3 big M's. You guys have seen this before, I'm sure. That stands for market maker move. It's based on the overnight move of what they expect to happen. Pretty doggone accurate, too. So anyways, back to analysis. We don't expect a 10% move. We expect maybe a 3% move, right? Maybe 4. Give it the benefit of doubt. 172. Well, there you go, folks. Spent $174, one contract. Now, this is based on the 17th. When are they coming out with earnings? 23rd. So you got to make sure you have your dates right. Down over here is the calendar. So I would do a day after 23rd, the 24th, and you still got $571 that you'd make based on a 4% move. Now that's taking into account today's Greeks, so keep that in mind. But learn to use this. It's a pretty good tool. Okay, sorry I'm bouncing here. A couple of things I want to go over. Richard brought up a good point and something that I want to talk about now, and that is what happened to Netflix today. Anybody know why Netflix took such a huge pop-up? Anybody want to type it in? It's a 3-letter word. They got a rate upgrade by Citi. Also, I gave this article here. They're preparing to do a stock split because they filed with the SEC Form 14A. They're authorizing 5 billion shares, from 5 billion shares to 170, seeking to increase its share authorization to 5 billion shares from 170 million. So when you do that, you can't, you dilute the stock to all heck. So this obviously is they're planning to do a stock split. So be prepared if you own that. Also, the reason that they popped up is Citi gave an upgrade. And this happened after market on Friday. And that's why you had this huge pop today, which put it right up. And I was talking to somebody earlier today, one of our members, and he was in this position. He had 7 contracts at the May 510s. Made a killing on it. Bought it for $7.25 or something like that. Sold it for, I don't know, $16 or something. And I told him, I said, hey, here's the extensions. I'll bet you it's, and this is when it was trading at about 477, 478. And I said, look, it's going to stretch to the 480s. Hits the 480s, it's going to pull back because that's the 50% extension. That's exactly what happened. This, folks, in my opinion, is a case for buy the rumor, sell the news. For that reason, I did not put it down. Other than if you want, I put down the article for the Citi upgrade from neutral to buy. I put down the article that you just saw for the stock split, so you can do a little bit more reading on that. I first thought, well, gosh, when I read it, I thought this is fantastic. It's going to pop, but I kept looking at that. I kept looking at that. I kept looking at that, and it just dawned on me, you know what? This is going to be one of those times where it's going to be buy that rumor, make a killing, drive that price on up, and then sell the news. Because, yeah, they get an upgrade. That's all good and fine, but that's based on longer term, folks. That's not based on their last 3 months of what their revenue is and what they expect. Now, their guidance is probably going to be good, more than likely, only from the standpoint that their international growth. They're going to go into international markets here soon. They have a very strong content that sets them apart from other ones. But you got Google, you got Apple, you got a lot of competitors coming into this game. Now, according to Netflix, they do not want to compete with these big boys because they know they can't. They simply can't. But what they can do is they can carve out a market niche on being real specific, and they've bought some shows that have super followings. I think one's going to be coming to the States here that was like #1 in the UK. I don't know what the heck it was, but people follow it like the plague. I don't watch these things. So, but they're given a long-term target of $750, which is interesting. So, this all sounded nice and rosy, but I'm not going to go against seasonality. So, you guys do what you want with that. And Richard, that's my opinion on Netflix. Illumina is a really strong company. ILMN. They are also coming out with earnings. It's a 14 out of 14 year, 100% winner by Best Choice. They're coming out on the 21st, Tuesday, next Tuesday, aftermarket. Analysts seem to really like this company. 12 strong buy, only 6 hold. And you can always try to do some reading and see what other people say about this. Illumina teams up with Merck Serono on a universal test system for clinical trials. On and on and on. So history tells me Illumina goes up pretty strong. What do they do today? What a nice looking chart, right? It's a nice breakout right there, folks. MACD just crossed. You can see this on Best Choice. If you go to my charting that has this setup, you got everything rosy. Everything's rosy. You still have the 49 above the 89, which is important. The blue line above the, even though it's curling over, you have a slight downtrend over the last 3 months. Everything's starting to pull up. You have a John Persons pivot study trigger. You have a David Elliott MOBO trigger. You have a Hull moving average trigger. You have a detrending price oscillator MOBO trigger. So I have 1, 2, 3, 4 triggers, which is all you really need. You don't need more than that because your brain won't absorb it. It basically tells me from a technical standpoint on a daily chart, this is a go. I like to a lot of times go to a 20-day hourly so you folks know. To see where that's sitting, and isn't that interesting? Just bumped up against the 38.2 based on a 3-month. This is a 20-day hourly. These retracement is based on a 3-month. So target, I put as the May 200s based on Friday's close. I mean, as far as a strike price to choose. Target, BCS target was 207. IV target was 205. 1 month standard deviation was 209. I also put a bull call on there, the 190 200s, which I thought was a good deal. Well, everything's changed. The thing popped up $2.18. So the 190 200s, wow, look at that. You got a lot of nice open interest there. $2.73. Well, you know what? Oh, excuse me. What am I talking? Let's delete that. Yeah, 190 200s. I don't like the fact there's not a lot of open interest, right? It'll probably gain some. There was 90 today, 110 today on those 2 strikes. I had that at $3.50 as of Friday, so it's gone up 55 cents. So it's that's pricey for me. I wouldn't do that. That's too expensive. On a $5 spread, oh, I'm sorry, it's a $10 spread. I'd still do that. I'm sorry, I'd still do that. My apologies. Because you have the potential to make $595, maximum loss is only $405. So you'll never make that full spread on a bull call. You never do. But if I double $405, I could make that, because that means I'd be selling it at $8.10, which means I'd still have another $1.80 to go that the stock could potentially run. If the 200 that I sold, I'd be able to collect all that premium, and I got everything's in the money. So that would still be something I would consider. Oh, I don't want to send that. Okay. NOW. Ooh. Don't like that. 90% probability it's going to go down tomorrow. Gosh, it's sitting way up here. Be very careful with this one. I saw a lot of activity on this. I thought I may throw a little money at it. There's only 3 years worth of history. I think they're coming out 416. Oh yeah, I was probably looking at spot month. Yeah, this is what I was looking at right here. A lot of bullish activity for at the money and one strikeout. I was looking at doing the 80-85s and I had 250, so it's actually a better deal because it's gone down $1.61. It's 235. Which again, you know, if you double that, that's $4.70. I could almost do that. There's a possibility I could, right? 265 versus 235. Two ETFs. Now, one of the reasons AXP, which is American Express, I'm a little concerned about, folks. I talked about it with a friend of mine. Costco dropped American Express, which may be a huge blow to them. It was big news, you know, month and a half ago. AXP, though, from a seasonal standpoint, I already listed it as a potential because it's a very strong historical, right? It seems to have, from an analyst standpoint, as I recall, from the ones that follow it, a pretty bullish signals. Let me verify that. No, it's mixed bag. It's actually probably more hold, moderate, and sell than it is to buy. So I did not include it in this week's chart. However, the reason I'm bringing this all up, because Citi, again, people probably don't play Citi, but it's coming up as well this week. These are companies in the financial sector, right? Because Citi is also a long. Let me change this to 10 years. But there's an ETF that tracks the financials, which is called FAS. It's the most traded out of there it is. But it's really right into the middle of the month, you see. So if you look at that part, you say, well, what does it do? It's kind of a short. So you go to best profit and say, what does it do after earnings? You know, most stuff runs up to earnings, but then after earnings, it tends to go down. So I put C as a potential play because I think analysts like it as well. I may change all of this before I send it to you guys, though. Oh no, that was just a lot of bias on the analysts. Out of 17, 14 say strong buy. Actually, it's 15 say buy out of 17 total. And then when you look at where's the action on this, tons and tons of bullish. Even though you also have the same thing here at the 50s, but it could be somebody selling to make a credit on this. That's on the spot month. C is coming out this Thursday. Before market. I'm going to keep it on the charts for a bullish. I'm not going to change. One of the reasons, though, I'm bringing all this up, and I listed this as a potential ETF trade, is FAS. If you folks don't have my list, again, just ask me. I'll give it to you. FAS shows up, I think it was on mine, wasn't it? April? Maybe not. Maybe it was on the ETFs. Nope. Let's try the 13 primes. VIX, of course, is a short, right? That's how I found that. 6 out of 6 it goes down, which also coordinates with everything else going up. And the fact that some analysts and rhetoric are saying we may be coming into a spring rally between now and the beginning of May. Very, very possible. But FAS, I don't remember where I found it, so I'll just type it in, is also a long. There's actually one I know I found that's 100%. I just don't remember which list it was. Oh, maybe it was this one that I recently just ran. Nope, it's not on that list. That's interesting. It's not on the earnings, Prime 11. It's not on the spiders. Well, it's on a list someplace, I remember, and I looked at this thing and it was 100%. This is showing 1 year it's losing, which is here. If you bought here and sold here, it went down. However, this here, it's here in the middle. I feel it's going to run up because historically it will. If you look at the pattern, it also is moving up very, very linearly. One of the things on Best Choice, folks, if you ever want to do, there's this X right here, right next to the magnifying glass. You can click it. So a lot of people are not aware. Go to a longer time frame, like a 2-year. You can look at the chart and say, well, what does it look like on a weekly? So you can see the weeklies. You can also change the candlestick and see that as well from a 2-year standpoint. So these are kind of skewed because this isn't designed for that. Anyways, I just wanted to show you that you have that ability to change that up if you want. Okay, I'm done. There's a lot of other stuff I didn't talk about. You guys can take a look at it on the Excel sheet. And before I go, are there any trades you guys want me to look at? Go ahead and type them in now. Well, let me get a pulse from you guys of what do you think of Netflix? Do you think it's one of the cases of buy the rumor, sell the news? Or do you think this upgrade and the fact that it exploded and is this going to continue to run? Any thoughts on it? Okay. Some people say, you know, it's buy the rumor, sell the news. Okay. Well, let's leave it at that. If nobody else has any trades you want me to look at, I thank you for attending. And like always, be careful, use stops, and good trading, everybody. Until next week, this is Gary signing off.